what I'm told is the way to make it happen. I think we're on episode 18 of the Advisor Tech Live podcast. Today I'm joined by Ian Wenik, the most feared and respected reporter in wealth, which is funny. I'm sure we'll get into that. Editor, Citywire, what's on your radar right now?
Yeah, I mean, that's a good question. I mean, I think what's nice is that we kind of hit the ground running. There's been no shortage of major stories to write about. Already in the past week or so, we've gotten out major scoops on a bunch of large M&A processes that have got underway, kind of my personal bread and butter. We've done some great analysis on some of the new SEC rulemaking efforts. We also ended up going up today on the Wealthfront earnings and that IPO. The Wirehouse earnings are getting underway. There's executive changes at tech firms, RIAs. So, the winter break really wasn't that much of a break at all. Felt like we just kind of got right back into it, which is good. The drive for news is what kind of keeps me going on a day to day basis.
No, I love it. I mean, I feel like what I'm doing is getting more and more into the kind of work that you do, I think. So I heard a rumor yesterday that Jump is raising 50 million at a $500 million valuation. Um, Rumor. That's not official. um, Nevis has raised 35 million at $200 million valuation. Finney 17 mil at $150 million valuation. What what is your opinion on these crazy valuations that we're getting?
Well, it's interesting because I do a lot of stuff. A lot of the M&A coverage I do is really focused on the pure play RA side, which
Okay.
is obviously a different business model. But even then, the multiples have steadily ticked up higher to now where the base case average EBITDA multiple is north of 10x. We've seen it approach 24, 25x on some of the largest firms. So obviously, tech valuations operate a little bit differently, but it doesn't shock me that the private capital quote unquote hysteria that we've seen the last couple of years has trickled into RA adjacent businesses and anything with AI. So that doesn't
Yeah.
particularly shock me. It seems like everybody wants to get in on the RA ecosystem in some way or another because obviously RAs are high free cash flow businesses. And not only is it high free cash flow, it's very steady, very predictable, and roughly market linked. So it's very easy to model out future returns and kind of generate or determine what exact leverage ratio you need to generate your IRR. So it all works as long as the market goes up. I think the question that people try to avoid answering is, what happens if the market goes down?
Oh, that is a good question. We should probably talk about that. Um, do you so you do some writing in the advisor tech space though as well, right? Or not so much?
Occasionally. So we have 5 reporters now, myself included.
Okay.
Alec Rich, who's been with us for a little bit more than a year now, he is kind of the spearhead on a lot of our tech coverage, but I still do some tech stuff from time to time. I did break the FMG process. We had a story today that Alec wrote breaking that FMG has just made a CEO change with Scott White kind of stepping aside into a role where he's more kind of sitting on the board as opposed to running day-to-day operations. I do a lot of stuff on the TAMPs. I've touched on Orion decent amount, invested a decent amount. We've covered those fairly extensively and deeply. But am I in the weeds on something like a Finney or a Jump? Not nearly as much anymore now that we've expanded, but I try to at least maintain a level of cursory knowledge.
Okay. No, that's good to know. What when you hear about a story, let's say someone leaks you a story and then you do research on it and then you go live, or you hear something that's maybe not public and then you take it live. What are there things that you're um like, what are the parameters for when you take something live versus when you decide not to report on something?
So that's a very good question. And I think that my answer hopefully kind of clarify some of the misconceptions about how kind of journalism works.
Sure.
So the first thing I like to say it's, a lot of prosecutors sometimes say there's a line between knowing versus being able to prove it in court.
Okay.
And with reporting, there's a very bright line between knowing and being able to publish. There's
Okay.
plenty of rumors that I've heard over the course of my years, not trying to tease anything, but there's plenty of things I've heard over the years that I know are true, but the threshold to getting it from 0 to 1, getting it over that line is so high that without either a certain person agreeing to speak on the record or access to a certain type of document, it'd be almost impossible to do without risking a lawsuit or severe pushback. So I'll use a hypothetical example. So let's say I got a tip that a large RIA was pursuing a sale, and I got that from someone who I have a good relationship with. So the first thing I would try to do is I kind of call it setting up the bat signal. So I reach out to a lot of my high level sources who would know about that topic. And what I'm hoping to do is get at least one other person, ideally more, to give me independent confirmation of the information that I'm putting them, and ideally additional details. And the goal with this is to avoid a sort of kind of game of telephone or information feedback loop. To ensure that the information that you receive is accurate, you want to get it verified from as many sources who know about it independently as possible. Let's
Okay.
say we're talking about a sale process. So there'd be certain key indicators that I would want to get to know that it's publishable. The main thing for me is identifying who the investment banker is. Because if the investment banker name is out there, then it's obvious that they've sent at least a teaser or some sort of sim deck. So clearly stuff has gotten out to the point that potential bidders are looking at it. And then the step from there is, you reach out to all parties involved for comment. You reach out to the selling firm, you reach out to the investment bank. And sometimes, a lot of times, they'll uh, either decline to comment or they'll give you the classic, we don't comment on rumors or speculation, which is the classic non denial denial. But if they come out and say, hey, this isn't true, you know, they're you ask different kinds of questions. You kind of go back, you do more reporting, you interrogate your sources. There have been some times in which, I have a source who has direct firsthand knowledge of something that a company or person named in a story is disputing. And I'm willing to go with my source over the quote unquote denial. And, you stick your neck out there, you get proven right. There have been other
Sure.
times where you have to deal with stuff kind of after the fact. But to sum it up really quickly, the goal is to get a piece of information verified independently from as many sources as possible, and then you want to give the third parties, people mentioned in the story, as much time to comment as possible to add their input in.
Yeah. Let's talk about a couple examples. So, like with the Elements story, I think Citywire published the Elements was assets were being put up for sale, and let's say some people that were users of Elements or involved didn't really appreciate the way Citywire pitched it. It just made it sound a little bit more desperate than they thought the situation was. What were you involved in the Element story?
I did report on that a little bit. Andrew Forch was another reporter. He had the lead
Okay.
byline. I had a double byline, but that's a situation. So the element situation, there were notices sent to users and shareholders that it was going through a liquidation process, and so that's one of those situations where the element of what's happening is undisputable because it's been formally documented, widely sent around. It's very easy to get access to it. And in that situation, we reached out to Elements, we reached out to SVB, Silicon Valley Bank, which is the primary creditor that foreclosed on the business and was pursuing a sale. And so it's a situation where you reach out to somebody and you don't hear back. You have to go with the best you can with the information that you have in front of you. So that's a situation where ideally someone engages, but when you have the documentation in hand, there's no question as to its truth or falsity. You go with what you've got that you can publish based on the information you've got right in front of you.
You get sued a lot. Is that part of what reporters deal with?
Have I been sued yet? No.
Okay.
Never say never. But the bottom
Right.
line is that, I've had people threaten me before, but you know, when that pops up, there's a couple of different things that you have to think about. I mean, one obviously is truth versus falsity. The second is, it's almost a practical concern is this story big enough to justify the risk of repercussion like that? And there are certain
Right.
stories where it is worth it, and there are certain stories where it might not be. So you have to think kind of practically. At the same time, you can't allow someone to threaten a lawsuit to chill your efforts on reporting. So that's kind of what happens. It's a tactic that people use, but you can kind of sense sometimes, especially I come from a family of lawyers, you can tell when a demand letter means business or is something that's kind of a that's kind of a bluff tactic. So it's a
Yeah.
threat you have to think about. But have I been subpoenaed? No, not yet.
So you talked about having a network of relationships. Is it are these people that you're like on a texting and phone call basis with, or how do you manage? How have you built, or how are you managing the network of relationships that are your sources?
Yeah, I mean, it's a constant conversation without identifying people because you never know who from the rivals might be watching or listening. Uh, yeah, there are certain people where I'm texting them or calling them or meeting them in person, some combination of those 3 multiple times a week, sometimes almost daily. So, I almost kinda put yourself in this feel myself almost as, like, kind of like a traffic director almost, where you're
Okay,
dealing with kind of a constant flow of information in and out, and you're constantly trying to triangulate things. But the main way in which you get stories is from building a relationship with people, catching up, talking to them, and making sure that the conversations that you have with them are trying to build an actual rapport and not just trying to pump them for information. So
sure.
to make it less transactional. And the thing is that some people kind of question, all right, if you develop these kinds of relationships, are you less likely to write about something that portrays them or their company in a negative light? And for me, it's the answer is no, because I think what helps is that when you have that open relationship with someone, you know that you can talk to them and they know that they can have at least some input in the story. Even if I don't like what's going to be out there, that they've been treated fairly, they've had a chance to at least have their input and have their way and have their say. So
Yeah.
it's a lot of it's a lot of work and it takes a lot of emotional intelligence.
So what I've experienced personally, just even in the last couple of weeks, is when you really stick your neck out there with a story that you truly believe in and that you think will help a lot of people, the there's a lot of positive feedback. So like recently I wrote a piece on Finney, and I've gotten like 40 to 50 super positive responses on LinkedIn, on DMs, on some people have texted me. A lot of people have emailed me. They're like, Joe, this is the best piece of content we've read in a long time. Um, and it's like super encouraging. I've also been challenged, like, Joe, Finney is doing good work because Finney is bringing attention and money into this industry so that, the whole map can get better. So somebody was like, it was a great write up, but you need to do better. You need to pretend like you're Eden and like you're going to, make this company as good as you possibly can. So Finney version 2 is coming soon, but just what's been your experience like when you stick your neck out maybe a little further than you're comfortable with, and then you get a huge amount of positive feedback?
It's a good question because, like, you don't really write for feedback, but there have definitely been some massive stories where you kinda get the heart beating a little bit faster before you hit publish.
Right.
A good example when that happened would be when we broke that, United Capital that Goldman Sachs was pursuing a sale of United Capital, then
Okay.
Goldman Sachs Personal Financial Management. And I remember just how, like, stressful it was, like, getting that story over the line and having it kinda sit out there for a little bit because you're really sticking you're putting your reputation out there. And it was just so satisfying to see, we had no doubts as to its truth or false as to its truth, but to see all the follow-ups come in and to see the other publications follow us up and credit us was just tremendously gratifying. I think the main thing is, I'm a big football fan. I always I always had a lot of quotations from, Bill Parcells, the great Giants coach,
Yeah.
and he always kinda talks about, "What have you done for me lately? What have you, keep do know, don't be satisfied." So, it's tough because, like, you get one story out, you feel good about it, you rest on your laurels, you let other publications catch up to you. So, you kinda have to celebrate it, you feel happy for a couple minutes, then you move on immediately to what's the next thing you can get.
So for me personally, I am in the business of making money by helping other people make more money. I mean, if we want to like dial it down to the very simplest thing, but you're not, I don't know that your income is directly tied to like how well you report. Is what motivates you, I guess.
I mean, for me, the bottom line is that our business model comes down to accurate information, and it's very much a reputation-based business. People advertise with us or choose to attend our events because they find our brand trustworthy and reputable. And the way in which you build a reputation is through accurate reporting. So I personally view us as being in the accurate information business, and it is an intense competition every single day to get accurate information out faster and more and better than the other outlets in the industry, so they can trust us. And so I feel like I'm kind of in the trust building business, and that people feel like they have to see what we report to make actionable business decisions. So
Yeah,
I view
for
us as
sure.
being in the information business,
Yeah,
and trust plays a major role in that.
yeah. Man, there's a zillion questions I could ask you, but Shannon Rosick was so kind as to offer us five specific ones, or four specific ones. Shannon said, "I want to know if he's ever killed a story because it's true but unprovable."
Yeah, so we've touched on that a little bit. There have definitely been
Right.
some stories in which I know that it's true, but the threshold to get it to the quote unquote reportable stage requires some form of documentation or someone willing to speak on the record that they say flat out no. And you know that you can't move forward with it responsibly without their participation. So that is something that happens from time to time. I'm not going to cite a specific story there
Okay.
because I don't want to put that out in the public domain, but
Right.
that is something that you've had to contend with. And you never a story is never truly gone and dead. You kind of file it away, and sometimes additional information comes out that moves it from that 0 to 1. We talked about that binary a little bit earlier.
Yeah, for sure. Um, you do a lot of work around M&A and private equity. What's the biggest myth RIAs tell themselves about private equity partnerships?
I think it's that they're still in control, even with a minority investor. The bottom line is that when you take in some form of outside institutional capital, part of your business at some point is devoted to giving them the return that they want. And that a lot of times can be in concordance with your prior business goals. And sometimes that's in conflict. Sometimes there's mandates for distribution. Sometimes there's mandates to raise fees or raise your minimums. And so I think the idea that even with a minority stake that you still have full control of the ship, I think that's a little bit of a act of self-delusion sometimes. Once you have a PE sponsor in there or some form of institutional capital, you report to them in some way, shape, or form. And I think that this is a business that's filled with people that are fiercely independent, and some are comfortable with that and some aren't.
So I think there's, at least from my understanding, there's like venture capital, growth equity, private equity. What is that an accurate representation of like money and the money that's available as you move up the scale?
Yeah, I think the other thing that I would add on top of that is that you do also have um, you have asset managers that invest in these businesses. You have insurance brokerages that invest in these businesses. With insurance, like their underlying goal is distribution. You have banks as well. You have banks as well. We had Essential Wealth Advisors. They did a bank deal a couple of years ago. So it's a little bit of everything. But yes, I mean venture capital plays a big role, and obviously at the mid to high end of the marketplace, private equity is the biggest and most dominant player.
What are some of the top private equity players in the, maybe if you do know, in the advisor tech space or in the M&A space? Are you able to list off some of those?
I mean, in the REA space, I mean, the ones that pop up again and again and again, you have, I'm going to, hopefully I don't overwhelm you. You have Genstar Capital, you have TA Associates, you have Onyx, you have Lightyear Capital, you have Bain, you have Carlisle, you have GTCR, you have Ares now. Um, I mean, basically every single big firm under the sun, with a couple of notable exceptions. Like you can throw TPG in there, obviously just invested in creative planning, General Atlantic. Most mid to large PE firms that have some sort of financial services focus, either they have a presence in this space already or they're trying to. And obviously, there are other, and the thing on the advisor tech side now, you have Jam, FinTop Capital, you have HG, which invested in nitrogen. Obviously, Genstar and TA, I believe that they jointly back Orion. Bain just bought InvestNet. So you're starting to see crossover as well.
From what you've seen, is it generally positive or negative, um, experience for the users of the softwares, I guess, when they get bought by or when there's a stake from private equity?
So that's a good question that I don't 100% have the answer to.
Sure,
But the good news about a question I don't have the answer to is that it's usually the inspiration for a story. And
sure.
so I think that what I might just turn around and do is go ask Alec and see if he can dig up some information on that, because that would be a really cool thing to dive into. And I think that we're really starting to prioritize this year writing about more things that represent the advisor on the ground at small to mid-sized firms or employees at some of these large firms.
Yeah, I think I know a fairly wealthy business owner that has a business coach, and one of her mottos is "Private equity is pure evil." That's in the medical space, which is a very strong negative connotation. I don't know that it's always that negative. I think sometimes private equity's goals can be very aligned with the underlying companies that they're investing in. But
Yeah.
it is true that sometimes purely trying to make more money is actually bad for the end users of the RIA or the software.
Yeah. Well, I think one thing that's important to note is that most of the private equity sponsors that invest in these firms are growth PE firms that a lot of times are pursuing incremental M&A. They're trying to grow these businesses. It's a lot different than, maybe some of the turnaround shops that might buy a conglomerate of rural hospitals that are struggling with bad Medicare, Medicaid reimbursement rates and struggling with their margins. So a lot of the sponsors that are coming in into the wealth space are coming in for different reasons than some of the firms in the medical field, for example.
Okay, no, that's very good to know. If you could force every large RIA to disclose one thing publicly, what would it be?
So I've been looking forward to this question for a while, and I did a lot of thought.
Okay,
So we are a UK, we are a UK corporation.
right.
Our headquarters are in London. We are the largest kind of satellite newsroom relative to the rest of the company. We have newsrooms in Munich, we have in Zurich, we have in Milan, in Singapore. But one thing that I have really thought about is in the UK, wealth managers have to disclose way more information to their equivalent of the SEC, which is called the Financial Conduct Authority. I mean, through their registration, they have to disclose their profit and loss. I mean, basically their financial results. But if you had to ask me one thing that I could look at, this is where public companies are really, it's interesting looking public companies. I'd love to get a sense of executive comp, what the CEOs of these companies are making, what their top lieutenants are making. And if we could find out what the ratio is of CEO pay to end advisor pay or client support or client service associate pay, that would be fascinating to look at and learn from.
For sure. Is there a way to is there a way to use Glassdoor, salary.com, or one of those to start some research on that, or where would you go to start researching that?
I mean, it's possible in theory. I think that what helps is that, we mentioned Wealthfront a little bit earlier. Once you're public, you have to disclose all of that information. So
Okay.
I think it's tough to get the direct visibility that we would both want in this situation, but the public companies are probably our best rough comp.
Okay. That makes sense. What's the next untold story in RAA land that you're circling right now that you're able
So
to
I
share
think
publicly?
Yeah, so I mean, I think a good theme that I want to explore, and you kind of hinted at this a little bit with your question about the end experience of software usage kind of degrading a little bit for advisors using some of these PE-backed software companies. I would really like to know what does happen to advisors at these firms who are kind of cogs in these mega mergers. I think what's interesting is you look at the Commonwealth LPL transaction and how many advisors decided they weren't going to be part of that larger organization and chose to leave. I
Yeah,
mentioned Goldman Sachs PFM earlier. There were several advisors, several large teams, tons of large teams that decided they'd rather go off on their own than move to creative planning. So I think that I wonder if there's almost too much there's a point of scale in which it's too big for a lot of advisors, and that kinda drives them out. And so I'm curious, what is the experience for advisors at some of these larger sponsor-backed businesses that is serves as the last straw for them and makes them want to get out? That's what I'd like to look at is what is the
I'd
experience
love
like in
to.
some of these businesses?
Yeah, I'd love to read about that. That would be awesome. All right, so we've
Yeah.
worked through those questions. Anything you want to talk about? I have a few more ideas as well.
Oh, I'm all ears, please.
Okay, let's get into AI, or as I like to call it, fake intelligence. What are your thoughts about AI?
So it's interesting because I get asked like fairly frequently, um, whether how I use AI or whether I'm worried about AI. And so my job at the end of the day, we talk about being in the information business. My job is to find out stuff that I'm not supposed to know and then go out and share it with the world.
Yeah.
So AI is not going to be able to replace that. AI is not going to be able to replace the relationship building skills that I have. Can I use AI as a tool to take care of some of the back end grunt work or data crunching and help us work on more data driven stories? Sure. And that'd be really helpful. That'd be really helpful. That's a real good use case for it. But I don't see it having that much of an impact on my actual kind of day-to-day operations. Maybe this will age terribly and I'll sound like a gigantic fool. You never know. But it is also interesting, like there are so many I am curious at how many of these fintech focused founders are starting to gravitate towards AI and use stuff for meetings, portfolio management. I think it's going to take a little time because obviously I'm not on the ground with some of these companies to know how exactly it does play out in their businesses, but it's interesting to watch as an observer. I'm curious how you've kind of seen firms adopt it and what kind of some of the first and second order effects have been.
Someone just sent me a picture. Oh, the title of the email was AI meeting hostages. And he sent a picture of himself with this older fellow, and he's got like three meeting note takers. So there's two people having conversation, and there's three meeting note takers. Um, I think, I mean, and then I recently published or not, I didn't publish it, but I shared a YouTube of Sam Altman, like in his actual physical pen and paper writing process, how he does note taking and has ideas and stuff. And I do think it's fascinating sometimes when the leaders of these companies, or like I'm sure you've heard, like some of the leaders of social media companies don't even let their kids have phones.
Yes,
Or like the royal family in England, I think there were some of them that were not letting their kids be on social media or something. Um, I think it is fascinating when the people creating this technology are not even letting their own kids use it.
I do find that fascinating.
Yeah. Um, you talked about finding things out that no one knows. So for me, it's like AI has taken all the knowledge in the world and made it accessible to everybody for almost nothing, basically. So basically, everyone has access now to best practices, which means that they are no longer the best practices. Now they are the average practices. So I
Yes,
honestly think like AI is actually a huge opportunity for humans that want to be awesome to develop, you know, like way more than best practices, but like practices that will stand out that no one else is doing.
I
Uh,
agree.
so that's something cool. What
I agree.
how do you think the way that you're looking about or thinking about AI compares to the way advisors relationships with their clients? Like, is do you feel like there are similarities between your work as a reporter and advisors' work? Building trust, building relationships, helping their clients reach their goals.
Well, this is where I think I am kind of sympathetic to some of the arguments around quote unquote AI for advisors, because I think that really probably can free up a lot of back end time to allow advisors to work on their relationship building. And I think at the end of the day, uh, people select advisors not based on technology necessarily or even investment performance. They really choose it for something that's not particularly quote unquote rational, which is they like the person that they're talking to and they trust them. And so we talk about this opportunity for humans. I agree with in the sense that, if you can have a lot of your back end stuff taken care of, then you can go out and focus on being a great prospector, being great at building those emotional connections and relationships with your clients. So I think there is a real opportunity. I think there is an opportunity there. I do see the rough analogy. I haven't thought about it like that before. That's a good way to frame it.
So I don't know if you've seen Kitz's study on advisor productivity, but he basically shows firms that are focused on efficiency, and then he compares it to firms focused on value and depth and quality. And basically across the board, or the average across the board, is that firms focused on efficiency make half as much money as firms focused on client value. I don't know if I'm saying that quite right, but that is
Interesting.
fascinating for me. Um,
That is
so like I have some conversations with some of the top like Zox and Jump and stuff. And all of the AI note taking marketing has been around. We'll save you 5 to 10 hours per week. And my point was like, that's fantastic. But what if you completely change the narrative to like, we will help you have far deeper relationships with your clients? And maybe that's, I don't know if that would resonate as much as we'll save you 5 to 10 hours a week. But I think actually that is the bigger, if AI can help human financial advisors create deeper, more valuable relationships with their clients, then that would be a wonderful use of AI, in my opinion.
I agree. And I like the way that it's framed. It's not from a productivity standpoint, but an opportunity standpoint.
Right. Um, so another, well, we could talk, actually let's talk about organic growth. What is your definition of organic growth?
I would say organic growth is any client asset that you bring in that doesn't come from a transaction. It has to be a net new client asset. I think obviously there's different types of organic growth within that. Some are higher quality than others. Some are more expensive than others. Some are cheaper than others. I would include referrals from like a Fidelity WAS as organic growth. Is that more expensive than going out and getting people from a webinar? 100%, absolutely. But I believe it's organic growth all the same. I think the dirty secret of this business, this is something that I know you know as well, is that there are a lot of firms out there that aren't actually growing, that are net negative X market. So, it's fun to think about.
Do you have any data on that? I know Josh Brown came out and said it's like 90% of RIAs are shrinking, and I'm not sure quite how stand up in court that is, but do you have any data or generalizations around what percent are shrinking?
Not off the top of my head, but I'd be interested to see more.
Yeah, for sure. How big is the organic growth conversation in M&A deals? Seeing as
Oh,
M&A
it's
is the
it plays a huge role.
okay,
100% it plays a massive role. Because a lot of times, firms are willing to pay premiums for businesses that have high organic growth rates.
what
So, and obviously firms that are kind of that have depreciating, you don't get the same premium.
for sure. As firms, so like from a small point of view, I think like building personal brands is a huge way to grow organic growth. Some examples are like Root Financial. James Cannoli has a great YouTube channel. Michael Kidzis, Josh Brown, Morgan Housel, like Michael Batnick. All the big names have built huge personal brands. Um, are large RIAs, broker dealers, are large firms working on this kind of individual advisor branding, or are they more focused on firm credibility?
That's a really good question. And think about how so many of the largest firms in the space have really historically avoided the media. But
Right,
what's interesting is that, there's several other businesses that have obviously grown because they rely on the personality of a charismatic founder. That's what Carson Group was like. That's what Edelman was like. Rick Edelman's radio show played a huge role. That's what Fisher, to an extent, has been like for a very, 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 very long time. Uh, it's fascinating because as these businesses mature, I think that they're less reliant on the rainmaker at the CEO level. But I do think that at an individual advisor level, that's where it might be able to play out and win out because you're not reliant on just the founder. It's an institutionally driven business, but you can operate within those confines.
yeah, I mean, Microsoft, Bill Gates, Apple, Steve Jobs, Tesla, SpaceX, Elon Musk. Like I think all of these have huge, massive personal brands attached to them. And that's interesting. Like Joe Duran, United Capital, or Peter Maluk in Creative Planning. Um, that even like Charles Schwab was a personal brand, or Vanguard was Jack Bogle.
Yes.
Like you could almost tie every single large company to a personal brand of some sort.
Yes, exactly. But the institution persists even after that individual is gone.
Right. How do they do that?
That's a good question. I think that part of it is a willingness to delegate power or responsibility. I think that also part of it is taking a step back necessarily from directly marketing themselves. I mean, how many Apple commercials did Steve Jobs actively appear in during his lifetime? It was slick brain that made the brand look cool, and then he, by extension, looked cool after the fact.
Sure. No, that's interesting. What do you think? I mean, literally, Peter Maluk on the Future Proof stage said that someone had told him he needed to get out in public and start telling his story because if he didn't tell it,
He
someone else was
listened.
going to. Yeah,
He
exactly.
listened. Also, we have told part of that story too, so
Oh,
it's a
sweet.
little bit of both.
I love. I yeah, Future Proof is awesome, especially when they end up on YouTube because then you can go back and reference them all the time.
Yes.
What So let's say there is a leader of a large RIA or even a small RIA that is not currently working on their personal brand, not getting the organic growth that they would like to see. What do you think is holding them back from taking the leap to working on a personal brand?
I wonder if part of it is, like, almost a lack of self-confidence in a sense. Like, it's scary to put yourself out there. It's scary to me sometimes to go out and reach out to sources I've never met before, and I've been doing this for years. I think that, it's like the fear of what if something goes wrong? How do you look if something goes wrong? The fear of embarrassing yourself or looking cringy.
Yeah.
And I think, part of it's just about getting yourself out there.
What I think that's something all humans struggle with. I think honestly I overcame that recently and have decided I can say whatever I want or do whatever I want. And you can almost I think the most selfish thing you can do is to give because by giving abundantly to the world of knowledge, ideas, even your time, you actually make so much more. Um,
Yes.
I wonder. I almost feel like the best way to overcome that is to go on a self transformation journey, to read books, to talk to people, to work with coaches or mentors, and to overcome a lot of these limiting beliefs that all humans come like standard with.
Yes. I think those are wise words right there. It takes a lot to achieve that kind of self-awareness and self-enlightenment.
Yeah, for sure. Um, so another big one is talent. I know there's a report out that like the industry is going to be short 100,000 financial advisors. And I was talking to one fellow, and he was like, "How come there's all these advisors that are struggling so badly to get clients, and yet we're hearing that there's this giant shortage on the other end? Like, isn't there a way to like marry the two and everything is good?" What's your take on the talent shortage?
Yeah, I mean, I think that's a good question. I think that part of it is because this industry has been really driven by the boomers in a certain sense, right? Like a lot of the advisors are boomers, a lot of the end clients are boomers. A lot of times, but to get the margin that you need, uh, you really need to have a high net worth once you're at the very beginning. It's hard to manage smaller clients profitably, so it's very difficult. I think what's interesting is that you see firms like a Mercer. We broke earlier this year that Mercer was changing its fees up for how it manages smaller clients. And the goal was to get those clients in early, charge them on a net basis that might be more than 1%, and then eventually get them to that 1% fee. And the idea is that you stick with them and get the relationship as they're still building wealth. So it's tough. And maybe it takes flexibility around fees and service models.
For sure. The I saw AdvicePay had crossed a billion in financial planning fees collected. I think that's a huge, and even broker dealers. I think even well, I'm not going to say a specific name, but many of the large firms are working with companies like AdvicePay so that their advisors can now take monthly
Yes.
recurring revenue, not just from AUM. Which is honestly that's an amazing shift in the industry, um, because advisors could only work with people with assets to manage for a while.
Yeah. And then
Um,
just a heads up, I've gotta hop off in, like, 5-10 minutes for to tape our pod.
all right, no problem. Um, what do you think about? So I've been writing a bit about like one to many service models. Um, what do you think about? Sorry, I froze for a minute. Um, is there a way that advisors could run one to many service models compliantly, almost like the Dave Ramsey financial coaching program, or um, basically to bring the price? So AUM is 1% generally. Even if you're charging monthly fees, I think the average is around 250 a month. Still out of reach for most Americans that need help. What is the solution to get good financial planning into the hands of people that are further down the wealth spectrum?
I think that it has to be advisors willing to, it's funny because I talk about, I was trying to talk with my wife a little bit about kind of the different models and options that are out there. I think the thing that really stands out to me is you talk about advice pay, fee for service, working with people on an hourly basis, kind of like you're hiring an accountant, an attorney, or just buying stuff or just working with them on a project fee basis. Because I think that the incentive to get the AUM relationship and have the ongoing recurring relationship, it locks you out of a massive universe of potential clients. Because the bottom line is that most Americans, most potential clients have relatively simple planning needs. They don't need ongoing portfolio management, ongoing rebalancing, ongoing tax planning. They're not MFO level clients. They just need help setting up a 529 and doing a 401k IRA rollover. Like it's not that hard. And you can manage those clients profitably by working with them um, on a project basis, charging them for when they actually need the help, as opposed to trying to lock them into a relationship where it might not work for either side and the RA loses money.
Yeah. No, I love that. Project-based or
Yeah.
event-based planning. That's a great idea. Well, we'll end there then. I think we both offered very deep value and did it very efficiently. So, thank you so much for coming on.
Thank you so much for having me on, and hopefully I didn't blow it enough to cost myself a future invite.
Oh no, not at all. All right, talk to you soon.
Talk to you, man. Bye.
Bye-bye.